Hey Bowtie Nation, Joseph Hogue here, and a video today not only for those stocks to buy for those returns we love, but also a way to protect your income in the future. Nation, the jobs problem is not going away. People have been quitting at a historic rate, with more than 4.5 million leaving their jobs in November alone. Now that's the highest on record, and there are now 11 million jobs available for fewer than 8 million people unemployed. If anything, it's only going to get worse as those baby boomers continue to retire. And the fact is, the US is heading into a worker shortage like we've never seen, and the only solution is going to be through technology. And of course, we're already seeing the very beginning of this. Restaurants are switching to digital ordering equipment at the table, Walmart has a robot that cleans the floors, even White Castle is now using a robot to flip your sliders. As with most trends, you want to be investing early in those picks and shovels plays, the companies making the equipment that are going to make you rich on that robotic revolution. In this video, I'll share 2 undeniable reasons why you need to invest in robotic stocks and how to find the best stocks in the theme. I'll then reveal the 5 stocks to buy now before the robots take over. We're getting started, but before we do, you know I've got to send that special shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. I'll be using StockCard to research our stocks to buy. Click through the link below and then go to the portfolios in the top menu. You'll find the Bowtie Nation portfolio in the stock picks section. It's free to follow, and you'll get email notifications whenever I buy or sell from the list. As a special bonus, I've negotiated an exclusive discount for all you out there in the community. Use the promo code BowtieNation, that's all one word in lowercase, for an exclusive discount beyond the free trial. Now, I want to get to that list of stocks to watch, so I'm going to show you why every investor needs stocks in these robotic companies next, and how to find them later in this video. First on our list, UiPath, ticker PATH, isn't the physical robots you might think about, but robotic processes through software applications. Now, this kind of business automation is going to be key for a lot of companies, and UiPath is a leader in that machine learning and the applications that make it possible. Management is estimating market growth to $30 billion by 2024, which would be 15% annualized growth, and even a fraction of that would mean decades of higher sales for a company that's just booking $810 million over the last year. UiPath added nearly 2,000 customers in the year to the third quarter, and what I like about this is these new customers often start with just those basic cloud automation services, but can then be sold up into the platform products for more revenue. So we're going to see that sales momentum growing. The company booked revenue growth of 50% in the most recent quarter and is expected to hit at $1.2 billion of sales in the next year. Now, this one is not profitable yet, but the financials are heading in that direction, and it's expected to be net income positive this year. But this one is also one of the more expensive on our list at 22 times on a price to sales basis. So definitely in that growth stocks theme, but the growth is there, and analysts have an average target of $61 a share, which is more than 60% above the current price. And we'll get back to our list, but I did want to show you a quick and easy way to get the stock ideas for this theme, how to find a list of stocks to watch. So if we go into StockCard and type in robot in the search bar, you can see it drops down with any companies with that in the name, collections of stocks around the theme, or best yet, a list of ETFs. I can click over to the page for this Global X Robotics and Artificial Intelligence ETF, that's ticker BOTZ, and if I scroll down, you'll see the top 25 stocks held in this fund. These are the fund manager's top conviction stocks for this group. It's a great way to get ideas for stocks in a theme, to start your research, narrowing your list down to only the best to buy. Next on our list, 2 Simple Holdings, ticker TSP, is in one of my favorite industries for robotics. Driver costs are as much as a third of a trucking company's operational expenses, and we're in the middle of a multi-year driver shortage. That's not only pushing expenses higher, but limiting the amount of freight that can be hauled. 2 Simple ran the world's first no-driver, fully autonomous route on public roads last year and has logged over 160,000 autonomous miles for UPS. The company's truck went 80 miles with no driver on board from Tucson to Phoenix, operating entirely on its ADS system. We're closer to that dream of level 5 self-driving in those commercial trucks than we are in the passenger market, and 2 Simple could be the first to get us there. The company has routes across the southern US, and 26 states already allow some form of autonomous commercial deployment. Now, revenue is pretty negligible here at just $6.3 million expected this year, but full commercial deployment could start as soon as 2024. TuSimple has over 1.4 billion in balance sheet cash against less than 5 million in debt, so plenty of that funding it needs to see it through to the operations. Trucking is a $4 trillion global market, so you can imagine that first mover in driverless is going to have some massive revenue growth. Analysts have an average target of $55 a share, under its June peak of $80 each, but still more than double the current share price. Intuitive Surgical, ticker ISRG, is an older company compared to most on the list and further along in development. The company leases its Da Vinci surgical system for robotic-assisted procedures with more than 8.5 million operations to date and in use at over 6,000 clinics. The pandemic did hit growth for Intuitive as healthcare servicers had to cut their elective procedures just to cover COVID patients, but sales still grew at a 20% annual pace and procedures at 17% a year pre-pandemic. The company estimates a near-term market opportunity of 6 million procedures a year, almost 6 times what it's doing right now. But the financials look great here, with an operating margin of 32%, and healthcare has some of the best long-term dynamics of any sector. We're going to continue to see that growth in patient services for decades. Intuitive has over $4 billion in balance sheet cash and no debt, so that financial flexibility we like to see. The average analyst target of $355 a share is only 12% higher from here, so no doubt reflecting that uncertainty around procedures during the pandemic. But this is a long-term grower, and I think it goes much higher than that. We've still got 2 more stocks to highlight, including one of the top 5 stocks in my own portfolio. But there's another reason why every investor needs to watch these stocks of these robotic companies. As of yet, the Great Resignation is affecting the industries with the lower wage jobs most. Here you see the job openings in accommodation and food services is almost twice the average. There are more than 1.5 million job openings in this industry alone. That's leading to booming wage increases for these companies and an immense pressure to automate as much as possible. But it's not just this one industry. Job openings across the labor market have jumped since pre-pandemic, and the problem of finding those workers is only going to get more intense. Now, there are only 2 ways to fix this kind of pervasive labor shortage. Now, one is we start having more babies, which it would take about 20 years to get them into the labor force, so not much of a quick fix, though it would be a lot of fun. Or the second option is we let the robots do more work. Now, as an early investor in these companies, that's going to mean outsized returns for your portfolio, but there's another reason to invest that most people just don't realize yet, and that's income security. You see, right now the robots are affecting only a small part of the workforce, mostly moving into those jobs within manufacturing, retail, and services. But this rise of the machines could be a huge boost to productivity and cost savings for companies, and that means the trend is only going to gain momentum. So whether you're taking meal orders or taking measurements on the space shuttle, that means you need to ask yourself, what happens when the robots come to take my job? Investing in these companies not only provides that upside return potential, but it lets you benefit from the trend that might put your income at risk someday. It means if you do lose your job to a robot, you've got a stock portfolio rising because of it. Next on our list of stocks to buy is actually one of my top 5 holdings, Salesforce.com, ticker CRM, just because it leads in so many of those big picture themes that are going to change our world over the next decade, including AI, remote work, cloud, and data. And now Salesforce might be another one that doesn't immediately come to mind when you think about robotics, but this one is a leader in the applications for artificial intelligence and automation that are going to drive those behind-the-scene changes. And these shares are the cheapest on our list at just 10 times on a price-to-sales basis. And you notice something looking at this company's revenue history. It's booked long-term revenue growth of 26% since 2014. That's been surprisingly consistent. While most growth companies see that quick burst of growth that slows just as quickly, Salesforce continuously finds new services and new customers to keep that growth rate. And this is another one where the analyst target isn't much higher, with just a 6% upside to the average target of $329 a share. But Salesforce has produced an annual return of 22% over the last decade and lots of room for growth. Next here, Cognex, ticker CGNX, is a leader in machine vision that could enable the next generation of robotics. The company makes optics for robotics that helps a machine guide, identify, and inspect its environment. And it's got a new line of 3D optics that could enable robots to function in the real world. Cognex has a strong market share in 4 of its 6 end markets, with 30% of the vision optics market and 20% of factory ID automation. Beyond that long-term expected growth of 12% in the market size, the company should also be able to book share growth on that leadership position. Now, sales growth is a little slower here at just 13% annually, but I feel like there's more opportunity here than what's realized, especially given the growth in robotics over the next few years. The shares trade at 13.5 times on a price to sales basis, so not necessarily cheap, but not nearly as expensive as some others on the list. Analysts see Cognex up 21% to the average target of $88 a share, but like a lot of these stocks on the list, it's that longer term potential that should be your reason to watch. Click on the video to the right for the 5 best stocks to beat inflation this year and how to find them. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.